Okay, it is 7 o'clock, and I like to start everything on time. So it is 7 o'clock. We're going to get started. Thank you for joining us at the second webinar of the Association of Nigerian Physicians in America. For more information, can visit our website at anpa.org. The purpose of the webinar today is to discuss the CARES Act, employment law, and SBA loans. I'm going to be moderating the webinar. Just for those of you who may or may not know about ANPA, ANPA is a 501c3 corporation that was incorporated in 1995. We represent over 4,000 physicians, dentists, and allied health professionals of Nigerian birth and origin and ethnicity. Because due to the current environment, our members are experiencing financial hardship from the COVID-19 pandemic. So we thought it would be a good idea for us to put together these experts to help us navigate through this rough water. Some of the ANPA memberships include professional development, leadership opportunity, practice referrals, networking, support in times of need and joy, medical mission, and volunteerism. Some of the invited experts today includes Jerry Vessell, who was invited to our first one, with Tom Weiss. Today we have J. Rollins, who's an employment attorney here in Atlanta, Georgia area. Barry Fruchter is an excellent CPA in Atlanta with Moore, Stephen, and Tyler. Nnamdi Jackson is an attorney in Miami, Florida, who deals with business and employment law. We also have Ryan Stoll, who is an SBA banker with Cadence Bank. And there may be other experts that will join and contribute. The topic of discussion today, let's meet everyone. Okay, everyone is muted. So just unmute yourself before you speak. We will discuss the COVID-19 employment rules and regulations, Furlough, Termination, CARES Act, SBA loans, the Family First Coronavirus Response Act, paid leave, and all the other issues that comes with that. That includes both for employed and self-employed physicians. Our expert will be giving ideas, not advice. The opinions given in this webinar will serve as educational purposes only and provides general information and basic understanding of the applicable law. The answers given during this webinar do not create an attorney-client relationship or an accountant-client relationship, as this presentation is not intended to provide a case-specific legal or accounting advice. That's the disclaimer. All right, with that said, the first expert I'm gonna bring on will be Jerry, where you at? Okay. All right, Jerry Vessell, can you hear me?
Yes.
Okay, Jerry and Tom will discuss the how
Tom
to.
Weiss on yet?
Yes, I'm here, Jerry.
Okay, I can't see you.
Yeah.
Okay, go ahead, Dr. Coral.
Go ahead, Jerry. You have about 5 to 6
Tom,
minutes.
go ahead, start off.
Sure. Please go to the next slide, Dr. Kuro. As Dr. Kuro said, we're not going to give you we're going to give you ways to look at things, nothing specific. Many things you may already know in your head, but but nobody has been through what you all are going through, or what the United States, the world is going through right now. So one of the things we recommend is take a step back and look at your practice as you've never looked at it before. Look at where and how you make a profit, and restructure it how you want it to look and perform. That is, look at every line item of expense, look at how you intake patients, look at how your relationship with your employees, with you and your patients. So it's a time just to take a real strong look at this while you have kind of an unfortunate break in your business. But now's the time to put yourself in a position for the future. You can do the next slide, Dr. Crow.
We're saying at this time, examine your fixed costs such as your rent and your mortgage. Negotiate your rent with your leaser to a lesser amount. Contact your banker about your mortgage. See if you can get the rate either reduced, refinanced, or deferred for a period of time. And look at your salaried employees. Tom, you're going for
Yeah,
that?
sure. And basically, what one of your largest expense, one of your greatest assets are your employees. Make sure you know what each one does, and be certain you're utilizing their talents that going forward to your new practice design. One of the things we talked about on the last session was looking at furloughing employees, but we're also going to, now with the new bill that was just passed, there are ways that you may be reimbursed for that. We'll let Ryan at the end talk about that. Same with terminating. So basically what you want to do, instead of maybe concentrating on termination or furlough, is look at how each person works together, how you want them, and really look hard at making sure these are the folks that you want to move forward with. Next slide, please.
Okay, evaluate your staff. Keep your key staff that you retain. Have them service your patients. Also, while they're there, if they're not servicing patients and they're employed there full time, I'd have them to market to clients, prospect to gain new clients, and to book your patients out in the future. But use their talents to fix up the office, repair things. Keep your staff active while they're there at the office. Don't just waste their time and yours. Next slide.
So this talks the doctor contract. So there's two sides to this. One is if you employ other physicians, it's time to look at those, structure those contracts, as you don't have, you're not having revenue being built. So you may want to look at, is this the way you want the practice to be structured in the future? Or if you're an employed physician, particularly if you're employed by a hospital, it may be time to take a look at that. And if you may be getting pressured by your employer to make concessions to your contracts, you may want to take a look at what you would like out of those two. So it's a give and take. Don't feel you have to be at a disadvantage. Be professional, and hopefully they will be professional too. As you're looking at your employer, as an employer, take a look at, is this the way you want your physician to be set up contractually? Again, you probably want to enjoy your lawyer into this. Go ahead, next slide, please.
We're saying rebook your patients out in the future. Most of your patients probably cancel appointments. You may have a period of time you can start filling your calendar up again. So we're saying keep in constant contact all your patients, your appointments. Have your staff communicate with them all the time on a daily and weekly basis. Book them out in the future, so you have, when you do go back to full work day and full staff, that you have a full day of work and employment. So think about the timeline when you like to have your patients come back to work. Okay, go ahead. Next one. Variable cost.
Again, this is basically you want to look at every line item that you have as an expense, and you may be surprised at what you've added or your staff has added, because every little bit adds up. So again, you need to really dig down deep into every line item and doing basically your own internal audit of all your expenses. Next slide.
Your corporate benefits, such as your 401k, your disability contracts, your life insurance contracts. You may have deferred comps, executive bonus plans, malpractice insurance, or property and casualty insurance. It's time to dig deep into all these contracts, make sure they're funded properly, make sure you have just what you need, not any more than what you need. Some of your life insurance contracts will have cash in them, which you can use that cash to pay their premiums for a period of time. And your 401k, examine that to see if you have a waiver clause on some contributions this year. So all we're saying is dig deep, dive into all your benefit packages right now and be aware of everything that you've got so that you're aware where you're at and financially can move on. Go ahead, Tom.
Sure. And looking at your corporate cash position, I think all of us in any line of work realize now that cash is very important. And as you restructure your practice, you want to look at yourself of maybe having a larger cash position as you move forward. So this will really come into play when Ryan speaks with regard to the SBA, what they have available for you. But again, it's looking at your practice and putting it in a position so you are stronger as you move forward, not only from a, as we've been talking about, from a employee standpoint, from a structural standpoint of your expenses, and then make sure that you know your overhead is correct. So again, really look at this SBA advantage that can come to you and use it to put yourself in a great position moving forward. Next slide, please. And again, just position yourself to, position yourself financially, de-lever, gain cash, and make sure that you're strong for the future.
We're also telling our clients to position your practice so when you come out of this situation, if you get back into it in the future, you're positioned not only financially but staff-wise to endure this process. So make your practice look like what you want it to look like in the future. You have time now. Okay, we're done.
Okay, Jerry and Tom, thank you very much for sharing your experience. Does anybody have any questions for Jerry or Tom? You can also use the chat function on this webinar. We will also have question and answers at the end. The next expert will be Jay. Are you ready, Jay?
Can you hear me?
Yeah, I can hear you, Jay. I just
okay. All right. Yeah.
You ready to go?
Yes.
Okay, wonderful.
I'm ready.
Okay, I'll pull up your slide. This is Jay. Jay is yeah. All right.
Well, that ended up being bigger than I thought it was going to be. So we can move on to the next slide, Doctor.
Okay. All right.
I know that there's probably going to be a good bit of crossover in some of the things that we're all telling you, or all some information that we're giving you. But from an employment perspective, I'm going to sort of cover understanding executive orders, shelter-in-place orders, and most cities and states, local governments are all putting those out now. And you need to be careful and understand what your local government says. We'll talk briefly about the Families First Coronavirus Act and the provisions of that act. We'll talk a little bit about unemployment rules. Georgia has come out with some specific emergency rules, and I have a feeling, I believe most states have come out with similar new guidance. And then finally, we'll talk very briefly about the Paycheck Protection Plan, but I know that you have a CPA and a banker who are going to be also speaking, and they are going to probably be able to give you more specific information. Next slide, Doctor. I am speaking specifically with regard to Georgia and Atlanta because that's where my practice is, but I think to a degree it is becoming more and more universal that states and local governments are putting in place restrictions, shelter-in-place orders, and you need to be very, very clear on exactly what the order is, who are essential personnel, whether or not you are an essential business that can continue to function, and even if you can continue to function, what those limitations might be. For example, in the state of Georgia, there are restrictions with regards to how many people can be in the same place at once. So if you are seeing patients, make sure that you stagger those patients so that you do not have more than the maximum number of people at one time in your office. I know in Atlanta, the mayor of the city of Atlanta issued an executive order which is fairly extensive in terms of essential businesses, who can do what, and what some essential functions for the essential businesses are. Also, be very, very careful and understand what the deadlines are. The deadlines are pushing back further and further. I did see right before we got on that Virginia has now put a shelter-in-place order in place that goes, I believe, up until June 10th, maybe. But I know I saw June. So, and the president has extended his restrictions through the end of April. So be mindful of when the restrictions end, and be mindful of when those are extended. Next slide. The Families First Coronavirus Response Act was enacted and signed 2 weeks ago by Congress and the President. The FFCRA has two primary provisions. One has to do with emergency sick pay, and the other has to do with emergency family medical leave. It's a bit complicated, but we'll try and go through it, and so it's at least understandable. The FFCRA goes into effect on April 1st, which is Wednesday. One of the big things is that it extended, under certain circumstances, the Family Medical Leave Act to all employers with one or more employees. So employers with less than 50 now are covered under certain circumstances by the FMLA. It has special rules for healthcare providers and emergency responders. Healthcare providers under the FFCRA generally are doctors, midwives, physician's assistants, but nurses and administrative people are not considered healthcare providers. And why that is important is that if an employee is not considered a healthcare provider, then they are still entitled to protection under this FFCRA. The enforcement is by the USDOL, but they have said that they will not seek any enforcement action for at least 30 days, but will assist employers in trying to make sure that they cover and that they comply with the act. Next slide. Doctor. So the paid leave entitlement provides that if someone, it gets a little complicated. Let's start at the bottom. Qualifying reasons. There are 6 qualifying reasons that someone could be entitled to paid leave, paid sick leave, and or extended family medical leave. 1, they are subject to a federal, state, or local quarantine. 2, that they've been advised by a physician to self-quarantine. 3, that they are experiencing symptoms of COVID-19 and are seeking a medical diagnosis. 4, that they are caring for someone who is under a quarantine, either a federal, state, or local quarantine, or one imposed by a healthcare provider. 5, that they are caring for a child whose school or child care has closed due to the COVID-19 pandemic. And 6, that they are experiencing some other substantially similar conditions that the U.S. Department of HHS hasn't really come out with any explanation on that. So we stick primarily 1 through 5. If an employee is subject to 1, 2, or 3, that employee is entitled to 2 weeks of paid leave at full salary up to $511 a day, or $5,110 total. They are entitled to leave for 10 days or up to 80 hours. If a qualifying event is for caring for someone else, or number 6, then they are entitled to 10 days or up to 80 hours of pay at 2/3 their salary, or with a maximum of $200 a day, or $2,000 total. If the person is, if the employee has to be out to care for that person's child because of the closure of a school or child care, then they are entitled to 10 days or up to 80 hours of paid sick leave, but they are also entitled to an additional 10 weeks of paid sick leave under the expanded family medical leave portion of the FFCRA. That is a maximum of $200 a day, or $12,000 total per employee over that period of time. Now, just so to be clear, the Department of Labor came out with some further instructions late last week, in which they basically made it clear that if an employee has been terminated or furloughed, or the office has been closed due to a shelter in place or a local order, then if they are not, as of April 1st, scheduled for any hours or any work, then they are not entitled to this paid leave. I don't want to get too far into the week. Why don't we keep moving? Let's move on to the next. I know we have a lot of information to try and cover here, Doctor. So the unemployment rules in Georgia, and I think most states have come up with their certain rules as well. But 2 weeks ago, the Georgia Department of Labor came out with new rules with regard to unemployment, and in particular with partial unemployment. If an employer has employees that they have reduced their hours or reduced their, and I'm not paid. If they've reduced their hours to a certain level, the employer is obligated to be the one to go online and to the employer portal and file each week for that partial claim for the employee. Employers who violate this rule and do not follow this requirement that they go online and fill out this information for the employee will be subject to fines and will be subject to having to pay the full amount of the benefits for the employee to the employee. Now, certain employees are not covered by this requirement. Employees who are being paid during a layoff, employees who are already on scheduled leave, vacation, sick leave, whatever that might be. Employees that are employed by a temp agency, employees who were employed in another state in the last 18 months, or were employed by the federal government or active military service. 1099 employees are not required, you're not required to file their partial unemployment claims. Employees who are voluntarily out of work. That's come up several times for me over the last few weeks. Employees who want to self-quarantine or are concerned about continuing to work, who voluntarily take themselves out of the workforce or quit, it's not the employer's obligation to file for unemployment for them. Employees who are permanently terminated, that burden, again, of filing unemployment falls on the employee at that point. We can move on. Next slide, Doctor.
Can you see, Jay?
I can't. I'm not. Next slide.
Yeah, I switched it already. It may be on the network.
For some reason, I'm not seeing that change. Okay. Oh crap! I'm sorry. My internet has just gone down. So you'll tell me what's at the top of that, then I can tell you.
Okay, this talks about on March 27, Congress passed the CARES Act.
Ah, yes, all right. So I will briefly talk about this, just because it is certainly a hot topic right now. I'm sure every one of the panelists have been answering questions. Last week, the Congress passed and the President signed the CARES Act, which provides for extended and supplemental unemployment benefits for employees. There is a direct pay for Americans, and probably for all of the participants, the most important aspect is the paycheck protection provision. The Paycheck Protection Plan provides for loans to small and medium-sized businesses that to use to cover certain expenses. I think you're probably going to hear a lot more about the specifics of, with regard to that, but the important thing from an employment perspective is that the provision, the Paycheck Protection Plan allows for a forgivable loan under certain circumstances. And for the most part, those circumstances relate directly to the number of employees, and it is intended to encourage the employers to either maintain their workforce or to get their workforce back up to where it was in the past at some point.
Independent contractors, self-employed, and gig workers.
I think that probably covers the majority of it. Covers my slides. You know, I'm sure I'm happy to take questions now or stick around for a little bit if you have more questions, but that's the overall overview.
Does anyone have questions for Jay? We're going to have a lot of questions on that. We have another attorney from Miami, and then I'm going to let the two attorneys speak, and then I'll bring in the awesome accountant to kind of put some numbers together for us. All right, any questions for Jay? Let me see, there's a comment, chat. Nothing there, no chat. Okay, hold on, there was a question on chat. Okay, so there was a question that says, I missed the part about paying the doctors. Are doctors part of the payment protection plan?
For the Paycheck Protection Plan?
Yeah, but yeah, I think let's let the other attorney go, and then the accountant. I think this will be addressed with both of them as well.
Yeah, yes, I'm sure it could. Yeah, it gets into details that they probably are going to cover better than I could.
All right. So if you don't want to talk in the webinar, you can type in your questions on the chat, and I will read them as they come in. So Jay, thank you very much for your time. I'm going to switch to let's see, Nnamdi. Nnamdi, are you there? Nnamdi, you might be muted. You might have to unmute yourself.
Okay. There we go.
Are you ready, Nnamdi?
Yes.
Okay. There you go. So Nnamdi is an employment attorney. I'm going to meet some people.
Okay, well, thank you for having me. If you could go to the next slide, please.
Okay.
All right, so the Small Business Act was enacted in 1953 and was supposed to promote enterprises in the US, right? So the CARES Act, what it basically does is that it makes changes to the economic injury disaster loan, and which is 7B of the Small Business Act. So as modified by the CARES Act, in particular, the Paycheck Protection Program, which is part of the CARES Act, a business will be able to apply for a loan if it's a small business with less than 500 employees, a small business that otherwise meets the SBA, a 501c3, an individual that operates as a small proprietor or independent contractor, an individual who is self-employed, a tribal business who meets the SBA, and a 501c19. So the majority of these normally wouldn't be able to apply for such a loan underneath the SBA. But again, during these times, the Economic Injury Disaster Loan Program, which is part of the SBA, is being amended by the CARES Act, which allows these places to apply. All right, so if you could go to the next slide, please. All right, so if a business is applying for a loan, there's certain certifications that any business is really going to have to state before the loan is applied for. And definitely make sure that you sit down with an attorney going over the contract, before signing anything for the loan. All right, so some of the certifications that are being sought is that the loan is going to be used to retain workers. And Mr. Rollins basically alluded to this, is that the CARES Act is looking to cause these businesses to retain their employees. So another thing that these businesses will try and certify is that the borrower does not have any other loan application that will mimic the one that they're applying for. And for independent contractors, sole proprietors, and self-employed people, they'll also be looking for certain documents such as payroll, taxings, and the 1099 forms that people that are sole proprietors and self-employed should be aware of. And there's actually other certifications as well that any business that will seek a loan should look out for, such as certifications that the business will restore at least 90% of its workforce that existed as of February 1st of this year. Another certification that it will not outsource jobs for the term of the loan, which cannot exceed 5 years, and for 2 years after repaying the loan. And that another thing that the businesses will also be sought to certify as part of the loan application process is that it will remain neutral during a union attempt during the application process. So if there's actually a union attempt by the employees during the process, during the loan application process, a certification that to look out for in the documents is also that, again, they'll be neutral during the union process, which they should do anyway. All right, so if you could go to the next slide, please. All right, so borrowers are going to be eligible to have their loans forgiven. And the loan forgiveness cannot exceed the principal amount. So a borrower, the business that's looking for a loan, is eligible for a loan forgiveness equal to the amount the borrower spent on the following items during the 8-week period, beginning on the date of the loan. So items such as payroll costs, interest on the mortgage obligation, rent on leasing, payments on utilities, and for borrowers that have tipped employees. Now, what will not be included in the amount, in the loan forgiveness amount, as far as how much money that the borrower is spending of that loan amount, what will not be counted towards that is compensation of an individual employee in excess of an annual amount of $100 grand. So let's say that a small business that's applied for the loan has gotten X amount of dollars as part of the loan. If that money goes towards paying an individual who makes over $100 grand a year, well, that's not going to go towards forgiving the loan, at least that amount that the employer used towards paying that employee that's making over $100 grand. Another thing that will not be put towards the forgiveness will be taxes imposed or withheld under chapters 21, 22, or 24 of the IRS code. There's what will also not be included is compensation of an employee whose principal place of residence is outside the US. And lastly, what will not go towards the loan forgiveness is qualified sick leave or family leave wages for which a tax credit is allowed under the Family's First Coronavirus Act. And lastly, regarding this slide, the amount of the forgiveness for the loans will also be reduced. It will be reduced if the employer reduces its workforce during the 8-week period compared to prior period to getting the loan, or reduces the salary or wages paid to an employee by more than 25%. So again, these restrictions on the loan that these small business would be getting, these certifications, and whether a certain amount of the loan will be forgiven, all of it is basically being done to try and promote that people can continue to get paid and business goes along as it normally was. And lastly, in addition, any reductions in the amount of the loan forgiveness will be completely avoided if the employer rehires all employees laid off going back as far as February 15th of 2020, or increases the previously reduced wages of said employees no later than June 20th of this year. So again, trying to promote that money go towards rehiring employees, keeping employees, and so forth. So if you go to the next slide, please. Okay, so the CARES Act also expands unemployment assistance for covered individuals through December 31st of this year, and it will apply to individuals who are unemployed and are partially unemployed or unable to work between January 27th this year and the end of this year. Additionally, a covered individual will receive an additional $600 per week on top of the amount determined underneath their own state laws. So the act allows for expanded assistance to continue for a maximum of 39 weeks, which is greater than the usual amount of 26 weeks that most states have. And then just the last two slides I have are regarding the Families First Coronavirus Response Act, which Mr. Rollins has already gone over, so I won't repeat what it is that he had said. And I'm open to any questions anyone has.
Okay, let me check the chat. Okay, so there's a bunch of questions on the chat. The first one is, do you have to retain all workers to get the loan forgiven under the PPP?
It's not a matter of retaining all the workers, but you can go, if an employee is laid off and then the money that they received as part of the loan is used to rehire that employee, well, then that could potentially go towards the forgiveness of the loan. Not the entire amount, because obviously if certain amounts of money are being used for some reason that wasn't being promoted by the act itself, such as, again, paying an employee who makes over $100,000 a year, where that most likely will not go towards forgiveness of the loan or a part of the loan. But again, to promote rehiring of employees, it's put into the act itself that they will look at the fact that X amount of dollars from the loan that was received was gone towards rehiring certain employees, well, then that can, be used as an argument that a certain percentage of the loan should be forgiven.
Okay. Another question: how are employees who make over $100,000 a year handled in the PPP?
Right. So when they receive the loan, and again, read the documents as part of the loan, but the way that the act is written, just the act itself, or not the documents that they might sign for the loan, the act itself is stating that if the employer is looking for a certain portion of that loan to be forgiven, then any money that is used towards paying that employee that makes $100,000 a year, that will not go towards any forgiveness of that loan. They could go ahead and do it. I don't see anything within the CARE Act that actually says that they're completely withheld from doing so. Now, granted, the documents for the loan might restrict it, perhaps, but the CARE Act itself, I do not see where it's stating that it will prevent you completely from doing it. It just states that if you're going to put some of that money towards, again, paying those types of employees that were making over $100,000 a year, that will not go towards any forgiveness of the loan amount.
So there's up to 100,000, but anything above cannot be used, correct?
Anything above 100, I don't see anywhere in the act says that you can't use it, because obviously once it's given, it's given. But if you're looking for forgiveness, then, and I'll let the accountant speak to that as far as proving to the government that where the dollars went. But if certain dollars are being shown to go towards an employee or employees that are making over $100,000 a year, well, then that's not going to be taken into account when the government is looking at whether to forgive any amount of the loan.
Okay, another question we'll talk about, if the physician is employed by their own practice, but is also the owner, can their salary be part of this loan forgiveness?
Well, right. If they're a sole proprietor, or if they're a solo doctor in their own practice, and they're considered an employee of their own practice. So if that doctor, from the way I read the CARE Act, that doctor is paying themselves over 100 grand a year, and that money is coming from the loan, can be traced back to the loan that they got from the government, then again, that's not going to go towards forgiveness of the loan.
I've heard someone say that up to 100,000, but not above. Is that
right? It's $101, right? So if you're capped out at 100 grand, then again, that money that you're using to pay employees that are making 100 grand or less, that can be used to show that, okay, I should have some of this loan forgiven. And again, if you're rehiring people, again, there's different ways that you can use to say that certain percentage of the loan should be forgiven. But the second you're talking about an employee making $101 or $100,001 more, then that's not going to go towards any discussions with the government as far as trying to forgive the loan.
And the last question before we go to the accountant is, if the employee hours are reduced during this period, does that affect the loan forgiveness portion?
If I recall correctly, if the hours are drastically reduced, right? So if the hours are reduced, so the amount of the forgiveness, the amount of the forgiveness of the loan will be reduced if the salary or wages paid to the employee goes down by more than 25% during the 8-week period.
Okay, I'm going to come back to you at where we left off. So let me have the accountant chime in, and then we can go to question and answers.
Okay.
So, okay. Anything else, Nnamdi? Oh, just stay on the line, okay? Let me bring Barry. Are you ready?
Doctor, this is Jay. I'm going to have to sign off right now. If anyone has any questions, they can shoot me an email or you can give me a call. My information is there, and I will be back online tomorrow morning.
Okay. Thank you very much, Jay.
Okay.
That's Jay. Thank you.
Thank you, Doctor.
Have a wonderful day. Okay. Barry, are you ready? You can unmute yourself.
Can you hear me?
Yeah, I can hear you.
Okay.
Can you see your slides online?
Yeah, I see it. Yep.
Okay. So there is an accountant here in Atlanta, Georgia, very smart guy, and I thought his opinion and ideas would be helpful to us. Take it away, Barry. I'm going to advance to the next slide, okay?
Yeah, that's fine. First and foremost, to you physicians out there who are on the front line, thank you for what you're doing. It's very appreciated within the community in the U.S. So as my wife would say, she hasn't seen me in about 4 days. A law got passed on Friday afternoon and signed by the president, and when it was getting signed, I was actually on the phone with the client, and the client was asking me, what are you doing? What's the answer? So what I'll give you guys today and girls is a 5,000-foot view of what this payment protection program is, which falls under the CARE Act. The purpose and the spirit behind this program is to help the small businesses stay in business and to be able to supply funds to the employees, so therefore they'll be stimulating the economy. That's the purpose of this. Everything's based on a 2-month period, because that's what the government figured out it's going to take to maybe keep people working and keep people to get the economy stimulated again. In this plan, there is a grant feature. And just so you know, some parts of this loan, and then we'll go into specifics, and I'm going to go into specifics. Part of this program, part of this loan is there's no guaranteed by the borrower, no collateral is going to be needed, there's no fee to the borrower. Any amount of the loan proceeds not forgiven are payable over a 10-year amortizable period, and interest payments will be more than likely deferred for the first year. So one of the things, too, when going through this is there have been no regulations written. We got a law, but when I read this law and have gone through it quite extensively, there are parts that just don't make sense to me on how you get to calculate certain things. But nevertheless, they're in the law right now. But the regulations may come out and give a little bit of a different result as we go down the path. Just as one of the attorneys previously said, while there's no loan guarantees, there is going to be self-certification. So what you say is going to be happening, you're going to have to self-certify on this. Dr. Kerr, why don't you go to the next slide? And probably continue one more because we had an extra or two extras. I'm going to dive right into an example. And, you know, I have been working with my clients all day long for the last 2 days, going through scenario after scenario, and really, what does this mean to them? I'm giving you here a real life example. You wouldn't know the characters involved, but I'm going to walk you through exactly how this program works. So the program's built into 3 spots. We have we have the calculation, the loan amount piece. Then we have the forgiveness piece. And then the third piece says, how much of the second piece do I get to forgive from what I borrowed from the first piece? So Section 1102 of this CARE Act basically deals with how do I calculate my loan? What is the amount of loan? And the amount of the loan is going to be based on the previous 12-month history information you have. So what I'm using with my clients right now, and each of you can go back to your offices and do this, is look at the last 12 months or use your 2019 financial data. Probably won't be much change between 2019, January through December, and March 1st through February 29th. After February 29th might be some change. Up to that point, there's probably not. And more than likely, because of what the law says, they're going to require the previous 12-month period from the date you get the loan. Well, nobody's getting the loan yet because you can't apply quite yet. It's coming. So in order to go through and do the calculation on how much can I get, if you look at my example, you got payroll costs, which excludes shareholders. I put in my example, the way I do my example, I said I just put in my employees. And then most of my, in this example, is a doctor. They're all making over $100,000, so I use 4 for them because they get up to $100,000. I add in all health insurance. You add in all retirement benefits. And that is all retirement benefits. If you got a cash balance plan or a defined benefit plan, as of right now with no regulations, that number's in play. State and local taxes, there's nothing here. That's more state unemployment. There would be some adjustment in there. But in this example, and as it relates to my clients, I'm not going through because that number is not material. And what we're trying to do here is say, what does the number look like? We sum up those numbers. You come up with about $1,164,778.37. The law says you take the monthly average. So we divide by 12. The law allows 2.5 times your monthly average. So we take that number. We come up with $242,662.16. That is my estimated amount of my loan that I'm allowed to apply for, based on the facts from this particular client. Now the question becomes that everybody wants to know, Barry, how much do I not get to pay back? I don't want to pay anything back. Well, that's okay. You'll get some. But let's talk, if you flip to the next slide, Dr. Curl, we'll talk about what's the maximum amount that may be excluded. This is not the answer. This is just a summation. And then we have to look at what reduction comes out of here. So you basically get here, it's a little bit of a different calculation. You get basically 8 weeks of a reduction. So we throw in all payroll costs. We throw in all the shareholder comp from previous. We add the health insurance. We add the retirement. But what the law also says is in this forgiveness piece, you could also throw rent, you could throw interest obligations, and you could throw in utilities. Utilities is like telephone, your electric, your gas, your internet, and we come up with the summation. That total summation is the maximum amount, not the amount, but the maximum amount you would be allowed under the law for the forgiveness of this debt. Now comes the tricky part. So now there's a couple of limitations. and it's all based on head count. So if you, you have 2 look-back periods, okay? And the look-back periods are, you got to look at look-back period A, which is from February the 15th through June the 30th of 2019. See how many full-time equivalents you had during that period. That's one box. Other look-back box is from January the 1st through February the 29th of 2020. And for that box and for the other box, you got to look and say, how many full-time equivalents did I have on a monthly basis? That's a denominator in this calculation. Now we got to take a look at the numerator. And the numerator describes how many full-time equivalents you had during the covered period. Someone would say, what's the covered period? Covered period is from the date you get the loan, 8 weeks out. So the covered period begins when you get the money, and for the next 8 weeks, you have to calculate how many full-time equivalents you had. In an example, let's say, for example, you had, in this example we used, I had 24 full-time equivalents. So if I had if I began both of those look-back periods, and one thing I need to share with you is they give you 2 look-back periods. The law tells you you could decide which one benefits you better. So if the January through February look-back period looks better, you can use that for the full-time equivalents. And then if the February through the June look-back period looks a little bit better, you could use that one. So then all of a sudden now we have to look at how many full-time equivalents do we have now versus how many full-time equivalents did we have during those look-back periods. Whichever percentage is greater is what you'd want to use, and that percent multiplied by your maximum forgiveness amount would be the potential forgiveness of the loan. As one of the other people said before, there is another look into if you reduce wages by more than 25%, that calculation would have to be considered. These rules are very, very complicated when determining how much is going to not be forgivable. They're not easy calculations. Let me think if there's anything else. I think that probably about sums it up, Dr. Kerr. For that piece, let's look at retirement funds. The next thing the reason I want to bring up retirement funds, when Dr. Kerr said, Barry, talk about some things, I want to talk about things that are going to put income, cash, into people's pockets during these tough and difficult times. So there are a couple of law changes that took place with the CARES Act as it relates to retirement plans. First thing, it removed the amount for required minimum distributions this year. You do not have to take them. This bill also allowed for, the CARES Act also allowed for qualified plans are able to advance up to $100,000 instead of $50,000. And if you have a loan out there from a retirement plan, this program gives you an extra year to pay those loans back. It also deals with people who have a defined specific health situation or specific situation with regards to the coronavirus. If they had to take care of a family member or a child because they're out of school, a person can withdraw up to $100,000, not be subject to the 10% penalty, and be able to put that back into the plan within 3 years and not pay tax on it. Again, what the government's trying to do, like the stimulus, like the Paycheck Protection Act program, is put money in people's pockets so they can spend some money in the economy and protect themselves. The final item is due dates and tax return dates. So again, going back, this is all about cash flow and managing your cash flow. So I share with you, quarterly estimates are now not due. Your first, second, and third quarter estimates, if you have to make them, are not due till October the 15th. If you have to pay it for filing tax returns, individual, trusts, estates, and gift returns are not due till July the 15th. And you do not have to file an extension. It is an automatic extension, so nothing needs to be filed. But on July the 15th, bear in mind with the tax return, as things currently stand, you will need to file an extension. That could change, but currently, currently you will be required to file an extension on July the 15th. If you wanted to file early, you can most certainly file early at any time. Well, that's it. Thank you very much for your time, folks.
Okay. Thank you, Barry. Any questions for Barry? Let me check the chat. Okay. You can also ask the question yourself. You can unmute yourself and ask if I don't get to your question. I'm not the only person asking.
Can I ask a question?
Please do. Just say your name and ask the question.
Hello?
Yeah, go ahead.
So you state that up to 100,000 would be forgivable. What if you recompense whatever is in excess of 100,000 from different funds and not use the loan? Would that still invalidate the whole loan?
Say the question again.
Okay, you're not allowed to pay an employee who earns over 100,000 out of the loan to be forgivable. So assume you pay up to 100,000 and that employee pay 120.
Yeah, I got you.
And you use other funds.
Yeah, so let's go back. Good question. So let's go back to my example, and let's go back, Dr. Okura. Why don't you flip back to the slide that had the $238,000 number on it? So under the law, these are what you're supposed to be using the funds for. And you could look down: payroll costs, capped shareholder comp, health insurance, retirement plans, and you'll be self-certifying that this is what you use the funds for. Now, that's not to say self-certification, you're on the honor system. I don't necessarily know. I don't know anybody knows how it works. But when you're saying I'm going to be borrowing the money, this is what you're supposed to be using the money for. I had a joke with a client earlier when we were going on. And what I try to tell him is the purpose of this is you can't take the money and go buy a house. I mean, the purpose is to use the money for these types of.
I'm sorry to interrupt you, but you're not understanding my question.
Okay.
When you use up to 100,000 for the employee, you have a certain reserve that you didn't borrow. Can you use that reserve to pay whatever is in excess of 100,000?
I'm sorry, I'm not understanding.
I think what she's asking is that, you know, if 200 grand is borrowed from the government and 100 grand it goes towards paying one of her employees, and then from her own business account that wasn't coming from the loan but was her own business account money she had prior, 20 grand goes towards paying that same employee that got 100 grand. Now you got 120 grand that the employee has received. Is that basically what you're trying to say?
Absolutely.
Yeah, I don't think there'd be a problem with that. If you weren't using the funds, you're using your own funds.
That's the way I would reread it as well. As he says, the regulations aren't there. They don't exist. But the way I read it, you're certifying that the funds will go towards something. So as long as the funds are being used for that, I can't see why you wouldn't be allowed to use your own business money that you had prior towards that same employee amount.
Yeah, thank you. That was the question.
Thank you.
Can I ask a follow-up to that question, please? Now, this same individual, instead of using his own private money, is also a consultant in another firm where he makes, let's say, for example, he's a physician in the practice, but he also consults with a pharmaceutical company and he makes another 70,000 from that company. But in his own practice, he's only paid 100,000. Would the loan be forgiven? Or would they say he made 170,000? Do you understand the question?
Do we have common ownership between the two entities?
No, we don't. But he owns the practice. He's a plastic surgeon.
Mm-hmm.
His salary is 99,000.
Okay.
Because he's a consultant in another pharmaceutical company that makes Botox.
Gotcha.
He makes another 100,000 from that.
Right. The answer would be, based on your facts, I have a W-2 from one place and I own a company in a separate spot. And from this place that I own my company from a separate spot, I am going to apply for the loan based on this separate spot, the separate company where I make $90,000 or $100,000.
Absolutely.
If that's the case, then that would be fine, because that's the company that would be going out and certifying and going out for that loan. That other compensation wouldn't come into play, I don't feel.
Okay.
Any other questions for Barry? Before I'll go to Ryan next. Ryan is an SBA banker. Let's talk about this banking, how to get the loan and all that stuff. You ready, Ryan?
No, I have a question for Bert
Okay.
before you go to Ryan. I have a question. So the question is, all this scenario that you're saying that, okay, like this, the last one, the total income for that person is now about $160,000. What about when he files his income tax? Is it not going to be reflected that he got a loan that was forgiven for $90,000, but he makes $160,000 for that year?
No, no. Well, what you'll have is, and I needed to just bring up one other piece about this loan. So that loan is between the SBA and that company. What somebody makes outside of that, it's between the SBA and the company, and they're applying for the loan based on what the company is doing.
All right.
And one other piece and I appreciate you asking the question, because it triggered me to remind myself of one thing for everybody. This loan forgiveness, it's tax-free. It is not taxable income, which is typically how forgiveness of debt works in the tax rules, and that's in the law.
So there was a question, the forgiveness, is it true forgiveness or is it going to be through tax credits?
Yeah, no. So the forgiveness says that if you owe, for example, in my example, the $238,000, you were entitled to the maximum amount, then you would not have to give back the $238,000 of cash.
Okay. Okay. Barry, stay on just in case if there's additional questions. Okay. Ryan, are you available?
Yes, I am, Dr. Coro.
Okay. All right, Ryan is an SBA banker here in Atlanta, Georgia, and he's going to talk about he's works for a bank. So I'm sure you guys have received the rules, right?
Well, we're still waiting on the policy. Apparently, we may get it as soon as Wednesday, but it's more likely going to be received by Friday as far as the final policy goes. I got to give it to Barry, though. Outside of myself and a few others that live and breathe SBA lending, he's definitely done his homework, because he covered almost everything I planned on covering. But just to give you all a little bit of feedback, in addition to what Barry shared, and just so you can kind of qualify the feedback that I'm giving to you, the feedback that I am giving to you is based on the review of the act that was signed into law by the president last week. Over the weekend, the National Association of Government Guaranteed Lenders, this is the major lobbying body for SBA lenders throughout the country, and this is who we SBA lenders typically take our guidance from, because they can typically interpret SBA policies better than the SBA can. That's who I'm taking all of my guidance from right now. So this is the most reliable source in SBA lending, as far as I'm concerned. Over my 10-year of doing 100% SBA, I haven't found another source that better explains SBA lending technically. So the only thing that I've heard today that I just wanted to add a little something to is in regards to the $100,000 salary rule. Currently, the National Association of Government Guaranteed Lenders has requested guidance based on whether individuals who receive $100,000 worth of total compensation from the company are excluded from this bill completely, or whether they can receive funds that are considered forgivable up to $100,000. This is as of this morning that I got this information. So we tend to believe that they are going to include the funds below $100,000 in salary, but the group that I look to for guidance is still waiting on feedback from the SBA to confirm that individuals who make over $100,000 can still get their 2.5 months worth of payments in an amount that is considered to be less than $100,000 when summed up over a 12-month period. That being said, about the only other thing that wasn't really covered in depth that I was going to cover was the difference between the SBA emergency loans or the SBA economic, what is it? I can't quite see it on my slide here, but the economic disaster loans and the SBA Paycheck Protection Program. There has been a good bit of confusion in individuals that I've spoke to about these two programs. They are very different, or they're different programs that tend to overlap in a few ways. So the SBA disaster loans are a program that's been around for many, many years. The SBA has been offering it to small business owners for decades. Small business owners apply directly through the SBA. I believe the maximum loan amount is $2.5 million. Maximum interest rate is 3.75%. This is not a forgivable loan, but you can utilize the loan proceeds in the disaster loans for just about anything you can use a term loan for in small business. The Paycheck Protection Program, as Barry and a few of the other individuals noted, the eligible uses of loan proceeds are salaries, benefits for your employees, rent, utilities, and interest on outside debts, as well as mortgage payments. And as everyone has talked about, if the funds are utilized for those expenses, and then through the review feature, once the loans are fully advanced, if we as the lender or the SBA can confirm that the funds were used for those expenses, then yes, it is fully forgivable, tax-free. And we are in the process right now, and I've talked to a few lenders at other banks. We're in the process right now of building out an online portal that should have an application process that should take very little time. Just to give you some context, we make these loans every day, or not these types of loans, but SBA 7A loans, which is the program that this Paycheck Protection loan is going through. Our average SBA 7A loan typically has about a 35-page loan memo. We're going to have about a 2-page loan memo in this program. Our goal is to get you from application to funded loan in as little as 10 business days. We're hoping to shrink that, but we really need the policy to determine exactly what boxes we need to check, so to speak, in underwriting to ensure that we get the guarantee on it, as these loans will likely result in SBA needing to recapitalize us after the loan is forgiven / defaults. Max interest rate on these loans are 4%. It is a 10-year term for any proceeds that cannot be paid off, or that cannot be forgiven, rather. And one of the rules that was brought to my attention yesterday that I think is very attractive for existing SBA customers: if you have an existing SBA loan, whether it's a 7A or a 504, within this Paycheck Protection Program, the SBA has decided to make your payment for 6 months on your SBA loan. That includes principal and interest. This will not be tacked on to your term and amortization. This is a true forgiveness of 6 months of payments. Most of my clients have already executed a payment deferral. If you have an SBA loan and you've executed a payment deferral, This 6 months will be added on to 3-month payment deferral that you have. And if you have not executed a payment deferral, it is my understanding, although the SBA has not explained to us lenders exactly how this is going to take place, but it's my understanding that your April payment will be paid by the SBA. So that's a feature I haven't really heard anyone chat about. You know, I can go over the other things that I was going to discuss, but especially Barry really covered pretty much everything that I was going to discuss, including the look back periods for calculating your expenses. You know, I think it'd probably be best just to answer any questions now, because I don't want to be the third person to say the same thing. So just to respect everyone's time, I'd love to answer some questions.
All right, Barry, one question that I had came through was, can you get both the disaster loan and the paycheck protection loan?
I'm sorry, what was that?
Can you get both loan? Can you apply for both?
No, I believe it's one or the other. It's the 7A or the 7B.
Hey guys, I got something on that. This is Ryan.
Oh.
You can get both of the loans, but you cannot get a disaster loan and a paycheck protection loan that duplicates expenses. So you can only borrow for your payroll through one of the loans. You can only borrow for your utilities through one of the loans, and you can only borrow through, say, rent through one of the loans. What I'm advising my clients is, if you look at the expenses that the paycheck protection loan covers, utilize, if you can wait on the funds, because it's going to be another week or two before those funds are available at least. If you can wait on the funds, utilize the Paycheck Protection Act for those funds, for your payroll, for your interest payments, for your mortgage payment, for your rent, for your utilities. Utilize the payroll protection for that, and then utilize the disaster, SBA disaster loans for other expenses, because you can have both. You just can't duplicate the expenses in both loans.
Can you talk about the $10,000 emergency loan while you're waiting for the SBA loan to be approved? And
so I actually had a client who just got this today. He applied last week for a disaster loan. This is not a CARES Act loan, because as Barry said, you can't quite apply for those yet. But he applied for the disaster recovery loan, and he received a confirmation number, and then he received the $10,000 grant. This $10,000 grant is just that. It's a $10,000 grant. There's no expectation of repayment. Whether you are approved or declined for the disaster loan, you get to keep that grant. You know, outside of that, I don't believe that there's much by way of what you can utilize those proceeds for in your business. You know, it's based on what I've seen, and I haven't done a ton of research on it. This is just a $10,000 grant that you're given for applying, whether you are approved or declined.
Okay, let's go to question and answers then. I think Abraham, you raise your hand.
Yes, I did. I wanted to find out whether there are closing costs associated with the SBA loan. Closing cost, and I think there's also a percentage that SBA typically applies when somebody goes for SBA loan. Are they going to be associated with this SBA loan at this time?
So, Abraham, this is Ryan, Stoll, Cadence Bank. My understanding as it stands right now, there are no fees charged on these loans. Okay. No closing costs, no origination fee. We, from what I heard on my call today discussing our plan around processing these loans, there is no fee charged. The maximum rate of interest that can be charged on a Paycheck Protection Loan is 4%.
Okay, anybody, if you have any questions, you can unmute yourself and ask. This is, I wanted to allow free question and answers during this time. This is time for us to learn. The whole purpose of having this is we want to be on the forefront of this. I don't want ANPA members to be behind in case if they run out of money, you know. Ryan, are they going to run out of money?
Eventually, it's going to run out of money. Yeah, I'm talking to a lot of people that want this free loan, basically.
Could I ask a question?
Go ahead.
Hi, Barry. This is Gordon Tanner. I hope you're well. I have a question about furloughing employees. We're in a position where we're about ready to furlough about 15 people, and we decided not to based on this loan. If we get the loan, would we be able to back pay the people who we furloughed, or is it better just to keep them on the payroll for now?
Well, I'll share with you. So you're going to have to go and take a look. Here's the problem I see, or here's the thing you got to think about. If you furlough them, that means you're not going to pay them, and that means when you go to look back at the last 12-month period, assuming you can get the loan sometime in April, and it can close, which I don't think that would actually be the case because this thing just coming out today, you know, you're going to have to give the last 12-month period. So if the salaries were in there, that would be the top part of the equation or the total loan amount. Then, you know, you go down to what the forgiveness amount is. The problem you're going to have is when you go look at the look back periods, is what I think you're going to have is when you look to the look back periods, you're going to have a reduced workforce with less full-time equivalents, unless you're hiring them back immediately during the covered period. Are you following me so far?
Yeah, I think so, but I thought the payment is from the time of the origination of the loan, and you calculate, and you're using 2019 numbers to figure out the amount of the loan.
No. The originate. So when are you asking the question about my look back period?
Yeah. Remind me what the look back period is. If you're using 2019 and you calculate a monthly average and take 250% of a month.
No. So what we're doing back with the look back period, what the government's doing is looking at 2 periods of time. And what they want to do is look at what you were doing before the coronavirus came in, because it's January through February. And then they want to look at the period of February through June of last year, which is the same, what they're considering this covered period area. And what they want to do is say, okay, tell us what your workforce looked like back in 19, and tell us what your workforce looked like at the beginning of 20. And they say you, the borrower, gets to determine which look back period you want to use when determining how much of the loan will be forgiven.
Okay.
It's your choice. It's your choice.
Okay.
Can you clarify that for me one more time? So the look back period, can it be the whole of 2019 or January 2019 to February 2020? What exactly is the look back period?
Yeah, so the look back period in the law is looking at 2 periods of time. 2 periods of time to determine how many full-time equivalents you had during that period of time as in relationship to what you have now. And so the covered period, you're going to have a certain amount of full-time equivalents that you're going to have. And the look back period is this period of time, and what they'll want to know is what is your average full-time equivalents during these 2 periods of time. And whichever gives you a better result is what you're allowed to use.
So, I'm sorry. So, my question would be, if you're going to be furloughing workers, and this may happen right before you apply for an SBA loan, would they be looking at that period? Meaning, like, your plan would be to hire them back.
I'm not sure I understood the question. I'm sorry.
So before getting the CARES Act loan, you're going to need to consider furloughing workers.
Okay.
So you do that. But the plan is to get them back. with the CARES Act loan. So my
Right.
question would be, are you going to be penalized? Are they going to look at that period because they were your workers? That's not even the case. It's just you furloughed them and you're using the CARES Act.
So when looking at the look back period, if that's what we're looking at, the look back period is from January through February 29th of 2020.
Okay.
That's one look back period.
Right.
And then the other one relates to 2019. So furloughing, if the question is regarding furloughing during a look back period, that wouldn't apply here. I just want to make sure I'm answering the question.
So actually, I'm not saying furloughing during the look back period. I'm saying furloughing now. Are you saying that because that is not included in the look back period, that would not apply?
Correct. So you're going to have a higher full-time equivalent.
Okay.
Yeah.
Okay.
Yeah.
Thank you.
Oh, sure.
Any other questions?
My question is probably because I came in a little late. So I wanted to know, is there a brief summary on the Family First Corona Response Act, paid leave and sick leave? What is the bottom line? This is Dr. Amaro from California.
Can somebody review that? That's a very important question. Because I think I'm just going to add to the question, with the families, if you have employees from April 1st, they can, if they're still your employees from April 1st, they can take their leave. If they're followed or terminated, they cannot take their leave, right? Can somebody answer that question? I think that's what he's referring to. Or the Family's First Coronavirus Response Act with regards to paid leave and sick leave.
You're asking if the Family First Coronavirus Response Act applies to furloughed employees, like if the employee is furloughed, that there need to be on some type of paid leave?
No, my question is that what does it really entail? Does that empower my employees to just say, I can't come in because a typical family leave is, I have somebody in my family who is sick, I need to go to see a doctor. That's a typical family leave situation.
Correct.
But the question now is, how does this new situation with the coronavirus, because people are scared, some of them are not necessarily ill, but there are people who are anxious that they don't want to come to work. What is this regulation trying to achieve or address? The Family First Corona Response Act, paid leave and sick leave issue.
What it mainly does, and you could go to the Department of Labor, the labor website on the very front page, the dol.gov, is mainly trying to expand which employers fall underneath the umbrella of the Family Leave Act, right? So usually it's 50 or more employees, and the employee needs to work for an employer for at least a year prior and at least work 1,250 hours in the previous year. All those are basically scrapped to expand, at least until the end of this year, which employers are covered. So it's any employer that has 500 employees or less, and so on. And your question about whether someone, if they just out of fear of catching coronavirus, if they can just simply not come into work, it doesn't give any protection for that. If an employee is healthy, there's no family member to take care of, no spouse, no child or anything like that to take care of in the home or elsewhere, and the employee simply doesn't want to come in out of fear, the Medical Leave Act, these two acts that were passed last week, they do not apply to that employee.
Okay, thank you very much. That's quite helpful.
But I also thought that there was an exception if you had less than 25 employees.
Yeah, can somebody discuss that? What are the exceptions for those small businesses that less than 25 employees? What are the exceptions?
So that exception mainly has to do with, okay, so if an employee qualifies for that leave, usually you got to give, once they come back from their leave, they need to get their job title back or something to the equivalent of that. And something to equivalent means a few things such as pay and the responsibilities that they have. Now, if you're an employer that has 25 less employees, then they're willing to somehow, relieve that employer by saying that you don't need to return that employee to their former position and there's basically three things: if the position held by the employee when the leave started no longer exists, right? And another way that specifically for, again, employers have 25 or less employees, if the employee ends their leave, you don't necessarily have to give them that job title back if the company makes a reasonable effort to restore the employee to a position equivalent to the position they had before, but simply can't. And lastly, the third is if the reasonable efforts, that's pretty much it. That's basically the two things. So if the position's eliminated, or just simply despite best efforts, they can't give that position back to the employee. So that's one of those exceptions that's specific to employers that have 25 or less employees.
There's a question on the comment. A doctor is paid as an employee by his practice. Can he apply for unemployment for himself?
That's a good question. That's usually going to be determined by the state, right? Because so the law that was passed last week extends extra money, the $600, the $600 on top of what the state usually will do for unemployment. So, and the reason why they do that is because basically all 50 states, they're left to their own devices for the most part as far as how they administer unemployment. So I would suggest that you specifically look for what your state, what their rules are.
Okay, so thank you. There's another question. It's a doctor that works as a freelance hospitalist who is not able to work during the COVID-19 because they have to take the children at home because schools are closed. Can such doctor apply for CARES loan to cover her salary for that period, or does the individual have to file for unemployment? That's a good one.
Is the question in the CARES Act about can the person receive or get paid some money from the paycheck protection program within the CARES Act?
Dr. Momo, do you want to expand? Unmute yourself. Don't mean to put you on the spot, but so this doctor's asking if they are not able to work because they are staying home.
All right, I can unmute myself. I'm just asking for a friend. If somebody is, a hospitalist and is having to take care of children at home and is not able to go to work, I was just wondering, is she going to be covered in any way? Does she have to file for unemployment, or what is she? I mean, does this, any of this, the thing passed, does it help such individuals in any way? For freelance hospitalists who only work as, locums, who only do locums.
So are you an employee of the hospital, or are you a contractor to the hospital?
It's not really for me. I was just asking for a friend, but it's just as somebody who isn't employed. She's, I'll say self-employed. She only does locums. She's not employed by...
Here's what I'll read to you, and it falls under the Paycheck Protection Act in regards to sole proprietors, independent contractors. So for sole proprietors and independent contractors, the sum of payments of any compensation to their income, whether it be wage, commission, or other types of self-employment income, they are eligible in an amount no more than 100,000 prorated for the covered period. So I read this as, yes, that individual would have a claim to make through the CARES Act if they cannot work due to COVID-19.
Okay, there's another question on the chat. Will a new business, this is probably for you, Barry, will a new business that started this year, January 2020, therefore does not have a look-back period to qualify for the PPP or any other loan, or can they get any forgiveness? That's a good one.
Well, as it relates to the PPP, I think the answer is going to be, as it relates to this, is you have to do the calculation. And they would be able to get whatever that calculation affords them. If they just started business this year and there were no wages, there was no health insurance, there was no retirement plan during the last 12-month period, then I don't know that they would get anything. I think what's interesting, and you bring up an interesting point, and it's not in the regulations. It talks about the last 12-month period, but I think what will come out in the regulations will be is if you have a short sub period, that the monthly average would be based on the number of months that the business was in operations. I think that would probably sound like the logical piece that would come out for that particular person. So they would have an average number, whatever number of months that would be. That would be that's what I would anticipate would happen.
Okay, there's another, go ahead.
Yeah, I just had a quick question. This is Dr. Onyo. Since the calculation of the portion that's forgivable also looks at the 8-week period that from the inception of the loan, how does that forgiveness work? Does it mean you have to pay on the loan and then later on you get reimbursed if it's over, or do they calculate that at the time the loan is given?
Yes. No. So here's what happens. So you've got this period, this covered period, is where you're going to determine how much is forgivable. They're going to forgive the loan. There'll be no interest for the first year, and then the subsequent year they're going to start amortizing once everything's certified the unforgiven amount over the 10-year period. Is how I would anticipate this is going to work.
So, but you say that's after 1 year. So you'd already started paying on the loan. What if no?
There's no payments on the loan for the first year.
I see.
The loan is approved with at least a 6 to 12 month deferral.
Gotcha. Okay.
Okay. There is a question. Is it better to file directly with the SBA for the loans or go to the bank? I think the answer is go to the bank. Is that right, Ryan?
Well, you cannot go directly to the SBA for the the Paycheck Protection Act. You have to go to a bank. For the SBA disaster loan, you have to go directly to the SBA. So for the forgivable loan through the CARES Act, the Paycheck Protection loan, you have to go through a bank. You have to go through an SBA lender, not directly to the SBA. You can't get it directly through the SBA.
Okay, that's another question.
Yes, Patrick.
Is there any penalty for reducing employee hours and salaries in regards to obtaining the SBA loans?
Yeah, I'm actually watching.
Okay, who's talking? Let's mute him. Who's talking? Let's see. Okay, so I'm going to ask the question again. Barry, it says, yeah. Is there any penalty for reducing employee hours and salaries in regards to obtaining the SBA loans? Okay, so let's go back. So if I reduce salary and wages, are we saying while I'm in the process of getting the SBA loan? Okay, if that's the question, then the only reduction would be is the estimated loan amount, because that would be down when you're doing that 12-month look-back period for the monthly average compensation.
Right.
So any other questions? Okay. Employee left the practice due to fear of contracting COVID-19. Will that impact the loan because the look back period will be different due to that employee leaving?
So let me restate the question. We have an employee that has left the company for whatever reason. Let's forget about that it's COVID-19. We just have somebody that left the company. Because if you bring the COVID-19 piece, then you may be bringing in some other laws and issues going on. But if somebody leaves the practice for whatever the reason on their own free will, then yeah, going back to before, depending upon when they left, the forgiveness, the loan amount would be decreased because the salary would be decreased. The payroll number would be decreased. So when doing the calculation, going back, I believe depending upon when they left and what the 12-month period would have been that you do for the calculation, then you would see some reduction. Conversely, if you hired someone 2 days later to take their spot back, you'd probably be assuming at the same compensation, then the loan amount would be at the same amount.
Okay, what if they left? Okay, the person just asked, what if they left because of COVID-19? I think it would be the same answer, right, Barry?
Yeah, if it's COVID-19 and it's an employment question, I defer to the attorneys versus me.
Okay.
But yes, if it from a compensation side, then yes.
Okay. Now there's a question in regards to the Families First Coronavirus Response Act. If an employee does not come to work because of fear of contracting the COVID-19, are they eligible for the sick leave, paid sick leave, or paid leave? Nnamdi, can you address that?
Sorry,
Nnamdi, are you there? Okay, I think Nnamdi, you might be muted. Let's see.
Hear me?
Yeah, I can hear you. Can you hear me now?
Can you repeat the question, please?
The question is, if an employee leaves the practice because of fear of contracting the virus, are they eligible for payment through the Family First Coronavirus Response Act, either a sick paid leave or paid leave?
No, the emergency paid sick leave and the Emergency Family and Medical Leave Expansion Act, two provisions that make up this thing called the Families First Coronavirus Response Act. I know that's a mouthful, but basically in total, it does not apply to employees that have a fear of catching the coronavirus. The Department of Labor has issued their guidance on this, that basically there's 6 reasons why that you could seek paid sick leave underneath these 2 acts. And I'll just briefly state them. You know, if the employee is subject to the federal, state, or local quarantine, right? So if they're underneath some type of quarantine on these federal, state, or local law, obviously they're not going to come into work. Number 2, if they've been advised by a healthcare provider to do so, if they're experiencing symptoms that they believe that they have it, if they're caring for someone that has it, or is just sick, I should say. They're caring for an individual, a child, and again, if they themselves feel that the that they have the symptoms.
Okay, and Nnamdi, does the first provision, does that include, when you mean quarantine, does that include the stay at home orders that we're getting from the different states?
Right, federal, state, or local. So if your individual state has a quarantine, if you're in New York City and there's a quarantine, whichever state that you're in or local city or ordinance that has been issued that quarantines you and you cannot leave, then that is a qualifying event that you could seek leave, the paid leave underneath those both of those acts.
So the quarantine and shelter in place are the same thing?
It depends. You need to read exactly, because for instance, here in South Florida, the way that they state shelter in place might not be the same definition that another city or county in the US has. You would need to read the individual ordinance or state law or federal that specifically states what it is that you're ordered to do by law.
Okay, there is a question on the comment. If one defaulted on SBA loan and it was regained, can that person still apply for another SBA loan?
Well, I guess I don't understand what they mean by regained. So I don't really understand what they mean by regained. If they stop making payments, if they default on it, then they get back in good standing and they end up paying off the loan in full. Yes. So if you were to get behind on payments and basically technically default by getting behind a few months, but work it out with your lender and get back into it.
They're currently in good standing and the loan is not paid off yet. They worked it out with the lender. So are they eligible to apply for these loans?
Yes, if they defaulted on an SBA loan in the past, but got it back in good standing, and there was no loss taken by the taxpayer or the SBA, then they would qualify. But if the SBA took a loss on that individual, they would not be eligible to borrow for SBA again.
Okay. Is there any other question? If there's no time, I'm going to bring back, is Charmaine, our president, online for the closing comment?
Dr. Koros, the audio is echoing.
Yeah, it just started to echo. I'm going to mute myself. Is this the echoing? I don't think it's okay now.
It's better now.
Okay. So in the absence of Charmaine being online, I'm going to go to Chris Okonsiri, who's our president-elect.
Thank you, Dr. Stanley Okoro, for helping to put this together. I, again, want to say another big thank you to all our presenters this evening. It's been an exciting opportunity to have all of you come in and share your expertise with our members. And I think our members are really grateful to hear from you experts about how to navigate this COVID-19 issue that has come before us without we knowing. So on behalf of the organization, I want to say thank you to the speakers and also say thank you to the members that have taken time to listen to these experts so that they can navigate this new world we have found ourselves. So once again, thank you everybody, and thank you, Dr. Stanley Okoro, for putting this together.
Thank you, Chris. The next webinar will be in about a week from now, unless if something happens or the rules change all of a sudden, which can happen. We will have a webinar, and for if you have any questions for me, feel free to write me, Dr. Stanley Okoro at georgiaplastic.com or treasurer@anpa.org. Otherwise, go ahead.
How do we get a recording of this session?
Good. The session will be recorded. It will be post. We're going to post it on the ANPA email group, and also we're going to circulate it in the WhatsApp groups as well. So, which chapter? We're going to send it. Do you get the email group? Okay, I'm going to just send me an email. treasurer@anpa.org. Okay, treasurer@anpa.org. I'll forward it to our IT people so they can add you to the email. But I'm going to send it, and I think they're going to also publish it on the ANPA website at some point. But if you don't,
well, it's on the ANPA web. Sorry, the first one we had is already on the ANPA website under the blog. So we're going to post this one too on the same place too. So if you go to the ANPA.org website, you're going to see the previous boot camp that we had.
This is Tabo.
And we'll post this one also at the same place.
Okay.
Yes.
So it's going to be Tabo. Can you state again where it is on the website?
The one we had last week is already on the ANPA website, anpa.org. So if you go to the blog, it's there right now. And then this one is after you post it on YouTube, I'm going to put it on the website also.
Okay, also on ANPA YouTube, that's right. Tabo, we have a YouTube page which we posted there as well.
Right.
So if you don't see it, just email me, treasurer@anpa.org. I'll send you the link. And it will be on our website, YouTube page. We're also going to circulate it through the WhatsApp group. If you're not on the WhatsApp group, we will have it sent to the chair of all the chapters in the US. And if you're not on your chapter's WhatsApp, maybe you haven't paid your dues. I don't know. Maybe it's time to pay your dues. You know.
I was gonna say that, Stanley. This is Cliff. This is an added benefit to ANPA members. So
some areas don't have chapters.
All of us to pay.
Some areas don't have chapters.
If you don't have chapters,
yeah, we can still pay national dues.
Yeah.
Yeah. If you're not on the ANPA e group, Tabo, how do they get on the e group?
Just send me an email, and I'll connect you. ANPA_Dokita, DOKITA.com.
Let me see if I could put it here real quick.
So ANPA_Dokita@msn.com. I'm sorry. ANPA_Dokita@msn.com.
Okay, I hope you got that. And if you don't, I can forward it to Tabo as well. I think Tabo, do they have to have their dues paid to be on the email list?
No, we're very generous. So you don't have to pay dues to be there. Just there.
But pay your dues though, okay?
But we encourage you to.
Tabo.
You know, as long as you fit into the criteria to be an ANPA member, potential ANPA members, we like them to see what our discussions and conversations, so they can be on the e group, and hopefully that will encourage them to pay their dues.
All right. Without further ado, I don't think any other. I hope this was an informative session for everyone. And is there any topic that anybody wants to have discussed in the next webinar so we can find the experts in those areas? Just send me an email, treasurer@anpa.org, treasurer@anpa.org, and just send me topics, questions, or things like you would like to see covered. This webinar was put together based on the last webinar, questions and answers, which was mostly employment laws, and taxes and stuff like that. And like Chris said, thank you very much for our experts. There was a question. Our experts are giving their ideas. ANPA is not paying them for their time at all. They're just helping us out. So I just want to say thank you very much for your time. I really appreciate you. All right. Other than that, any last comment by Chris or Cliff or Tabo?
No, thank you, Stanley. Very good job. This is Cliff Eke. I really appreciate your leadership in this area. And I will learn so much, especially the speakers. Thank you very much. We read these things about all this CARES law and all these things. I don't understand it. But now that I've heard from you guys, it makes more sense to me. And I learned you're doing it for free. So God bless you for helping us donate your time and your expertise. Thank you.
Yeah, and I'll echo the same thing. And like I said, we have a website, anpa.org. We have an Instagram, Twitter, Facebook, and YouTube. So all that information you have here today is going to be on those apps also. But thanks for having this, Stanley, and thanks to the panel too.
Thank you very much. I'll talk to you guys next week. Have a wonderful day.
Thank you, guys.
Thank you too. Bye-bye.
Thank you. Bye-bye.
Next time I know.